Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, July 7th, 2026. It is 9:08 a.m. Eastern Time as I'm starting the video, so the markets aren't open yet. Just been going over charts this morning and replying to some questions and comments on the homepage of the site. So here's what we're going to do in this one. I want to really focus the video, just do an update on the semis. And before I do that, we'll just start out with the market. Remember, as I've been stating lately, a couple things going on. We're, post Independence Day holiday now. Remember, the markets were closed on Friday for the U.S. Independence Day holiday, which was fell on Saturday, but observed on Friday. So, and around that time, as I said last week, a lot of traders are out on vacation. Heck, usually I'm not around this week. I'm usually in the mountains of North Carolina or somewhere else, either, well, hopefully cooler than down here in Southwest Florida. All right, here's what we're going to do. Just to reiterate, we have a lot of, it's a stock pickers market. I'm here. I'm not on vacation, so you're getting updates. Um, and although the Nasdaq 100 is going nowhere but sideways for the last month plus, almost 2 months now, really since pretty much we entered early May, this trading range right here. We had a major, what I consider a major sell signal here on the break of the primary trend lines off the lows from March 30th, right there. That's your primary uptrend line. Hit my first target, bounced, and we've been bouncing around. So not much more to add than that. But again, I would say if you're only trading one thing, if you only trade the indexes, you can't squeeze water from a rock or blood from a stone, right? And if you're an active trader, sure, you can bounce off these levels. I've given you support and resistance levels, but just going to update, which I've been saying since last week. I still favor these additional targets being hit. We already hit T1, so it's been checked, really, so to speak. And these are the next targets, but we're not going to get there unless we take out this level. I'll call it the 705-ish support. That's what we danced on last week, getting close there. And if we do break to the upside, so kind of to summarize it, the risk reward right now, the downside from where we're at now, from the sell signal, I think I called for about a 15% drop. I'll tell you right now, if that T4 zone's hit, yeah, going to be about 15%. And from where we're at today, this is yesterday's close. I turned off the pre-market just to clear up the lines. When I have the pre-market trades on, it kind of skews some of the trend lines. That's about another 12% downside. So while, should we pop to new highs, as I've been stating, I believe any new high, well, I know for a fact if it happens soon, this is not opinion, this is fact, it will be a divergent high on multiple time frames. Daily chart, you can see the indicators are lagging enough. The momentum indicators down here, the PPO, the RSI, that any new high anytime soon is guaranteed to be a divergent, marginal new divergent high. Doesn't guarantee that you can't do that and burn through the divergence. But from my experience, as I state often, breakouts that occur with negative divergences and overbought conditions have a much higher rate of failure. Now, we've worked off some of the overbought conditions that we had some extreme overbought readings here, but I've also gone over that and spoke to that before. This is the most overbought that we've been since right back here. We hit some extreme overbought readings, had a pretty healthy double-digit drop, continued to build divergences back here, and then had an even much larger drop in early 2025. So, all right. So no update there. Like I said, there is money to be made right now. If you're, an active trader and that's all you want to do is trade QQQ or SPY or the futures, great. I don't have to tell you what to do. You're going to go down. What I do in those cases, I'll drill down to the 5 and 15-minute charts and just bang off the NQs, try to get a percent or point or two, 1%, 2% on these little micro moves. But I'm not doing much of that lately. Like I said, summer doldrums right now, low volume, a lot of people on vacation, leads to whipsaws. There are much better fish to fry elsewhere. So let's get into that. I'm going to do, again, a quick update on some of the posts and questions I replied to in the last day or two, including quite a few this morning. And then we're gonna look at the semis, do a little bit of a deep dive in the semis. Okay. Okay, just to make sure I didn't miss anything, we're going to go back. I believe I've gotten all these. If I didn't, if you drop a question and it's in a previous, I usually go back one or two, keep checking these. And if I missed something and I didn't reply to a question or a comment you posted, just post it again under one of the newer posts, and I should catch that. And you can always tag me. Um, Tag at I'll get it, yeah, R, right side of the chart, RSOTC. Um, you can do this. I'm not sure if that one gives me an email notification. I usually check here, but the at sign RSOTC gives me an email notification. I know. All right. So either way, this one was yesterday. I might have covered this in yesterday's video. If you're interested in that EQIX, my thoughts were there, and I believe I did cover that one already. All right. Somebody asked about this. No, did I miss that one? Yeah, okay, I did. All right, let's look at it. All right, here's one I missed. Slip through. Oh no, I covered that yesterday. Yeah, I did. I covered Smuckers. That's SJM. Yeah, that was in yesterday's video. This one I got this morning. Just saw this one. What's your read on this behavior with the PCCE? This is through, I guess, TradingView. I do have. I once in a while use TradingView. I have an account there, but I don't. It's not my go-to charting platform. And I replied, I believe these are erroneous prints. Put call ratio usually doesn't get that low. And somebody said it might have to do to the holiday. Doesn't correlate with my put to call ratio chart. Remember, that's the total put to call ratio. There's several I follow. I follow the CPC, which is the total put to call ratio. That's all put to call buying, includes stocks, indexes. And as I've covered recently, we've hit my sell level, the red zone here, where as it says, extreme complacency, wait for sell signals to signal to sell your longs and or go short. Well, we've already had sell signals. We're on sell signals on QQQ. It's not playing out as it sometimes does. Again, I'm talking about the trend lines. We had the trend line breaks March 30th. And again, it's not playing out. We already hit the first target. It's just, I make a lot of things up. I call my own yogiisms in trading. And one of those is I like to say, the expression you've heard in life, patience is a virtue. And then I like to say in trading, patience is an absolute necessity. So whether you're short QQQ, NQ, or anything or not, it's up to you. It's still, I give you daily updates and nothing's changed. It's just going sideways, and where the next sell signals need to trigger. I already just covered that in the beginning of the video, and I've been talking about that recently. All right, so and this just aligns up. So again, right now, let's just say you're new to the site, or you've been an existing subscriber, you just got back from vacation, and you want to, you're seeing this now, and I missed that March 30th sell signal. I'm sorry, the break of the trend line for March 30th. Well, again, so we're on that. That's fired. That put to call ratio indicator, and we're down at the buy zone. So now at this point, best to just wait for a break of that 705 level. It's not much, it's only, what is that? It's only about 2.5% below. We break that, I think the odds are pretty good. We're going to go on down. May probably get another reaction on my first target zone, but it's already been hit once, so that increases the odds. We're going to go down here. So that's probably the best plan of action. And again, right now, it's kind of like that Austin Powers scene with the steamroller, and the guy's in the way, and no, stop, and it's real slow. It's this can wake up quickly. The market can suddenly wake up, whether it breaks out to the upside or downside. And then what I was saying before, guys, I'm sorry, I never finished my train of thought there about the RR. Like I said, just to clarify, from where we're at today, I see about the potential for a good 12% drop. And if we get that, remember, it may and quite possibly will trigger some more bearish developments on the more significant longer term weekly and even monthly charts. This is just a 60-minute chart, so I'll address that at the time. But where I was going, so from a risk reward perspective, as I said, any new high will be a marginal new high, and I would put very good odds that that breakout fails. So I don't see a lot of upside. Again, anything is possible, and that's what stops are for. So if you pop the recent highs, again, your stops are going to be commensurate with your entry point. Did you short there? Did you take profits there? or you still, short? That's your entry point. If is that your price target? If so, then you have a 15% profit potential. So you can easily give yourself a 5% stop loss, 5% above that level. And that's a 3-to-1, very attractive 3-to-1 risk reward ratio. If you're only going for this target, well, then that's a lower profit potential. So again, if that's just making that assumption. But what I do each and every day is I come in and I highlight on all the trades I'm covering when I'm doing updates, objective entry add-on points. If you missed the first shot around, whether it's a long, on a long trade, I'll highlight pullbacks to support as objective entries. And on short trades, I'll highlight um, rallies back into resistance or breaks of support. Um, and on longs, just to clarify, the objective entries on longs are usually breakouts above resistance or pullbacks to support. Okay, let's move on. Let's go to the next one. That was yesterday's. Actually, I did 3 posts yesterday. Today, all right. And again, you can check. I'm not going to spend a lot of time here. Somebody asked Uber setting up for potential long up with the breakout of this downtrend line, resistance wedge patterns, bullish divergence form nicely. So here's my reply if you're interested. Lots of moving parts on Uber, so just come check out the chart. Here's what has to happen. You can see here Uber's been 1, 2, 3 getting rejected off this 200-day exponential moving average, the red line right here. You also have a very, very, I should say a nice, pretty nice resistance level, especially recently. So that's it. So on this one, yes, if it can break out that level and it's dual resistance, it's about 78.50 price resistance and the 200 exponential, which it's been getting rejected off of. So you need that to happen. Otherwise, you're going, to go long here, you're going long just below resistance, and that goes against everything, again, in technical analysis. If you're, close to resistance level, just wait for it to break out. Your entry's a little lower. Now, can an objective case be made? Yeah, there is some, bullish developments here. You had a breakout and a successful backtest of this bullish falling wedge pattern that's comprised of the downtrend line. And you had a positive divergence right there. You extended the divergence on the back test, and so we're above it. But we're in between a rock and a hard place, meaning support and resistance. And again, you also have, as you can see down here, the near-term trend is bearish on, and this isn't just Uber, it's a lot of stocks. I look at every stock differently, every index, but on a lot of them, and sometimes I'll modify my line, a charting platform on the PPO or the MACD. If you don't have a PPO on your platform, use a MACD. It's very similar, close cousin. The zero line is kind of the default. You can use it for a lot of things. Bullish bearish crossovers from the PPO line. And it also helps delineate the trend as being bullish or bearish. And I like to use the 9 EMA, which is a signal line, because that's the last of the 2 to cross. It helps filter out whipsaws. That's the white line. And so you can see here clearly when you're below it, the trend is, I'm going to box it here, bearish, right? Pretty simple stuff. When you're above it, as you were from here to here, the trend is, yep, got it. Simple stuff, bullish. So now the other thing about it is once you're above or below it, the zero line often acts as support and resistance. So you get, once you broke it, you lost it here. And there was also sell signals. I don't trade on this in a vacuum. I use it in conjunction with other things. So in Uber here, you had a divergent high, beautiful bearish rising wedge, breakdown, negative divergence, everything I like to see to short a stock. Then you flip down, you cross down below the signal line after being in a bullish trend for quite a while, pretty much this whole period here. So to encompass that whole bull run right there, you got the sell signal. And then look what happened since. And it happens in reverse as well when you're above it. Rejected, rejected, rejected. And we've been, pretty much getting rejected. We're there now. So a solid break, if we move clearly above there, and above resistance. I put the higher weighting on resistance, but this would follow. Then yeah, maybe it started a new bull trend, and I gave you targets. One of them's blocked there, but they're in that post. Either way, so like I said, a lot of moving parts. And at the end of the day, as I like to say, resistance is resistance until unless taken out. This stock started a bear trend here. It is clearly in a bear trend with no evidence of a reversal other than, that was a recent bullish development. But, in a bear market, you're going to get divergent lows or a bear trend, whatever you want to call it. This is a bigger sideways trend. I'm talking intermediate. I speak to different time frames. If you look long term or intermediate for the past year and a half, the stock's gone nowhere. It's been in a sideways range. Near term, you can't argue. This is not subjective. It's in a near term downtrend. Higher highs, or lower highs, lower lows. That's it. So positive divergence, got the potential, but in a bear trend, a lot of times you get positive divergences and it works for a counter trend bounce, and then they get sold into and the downtrend resumes. Just like in a bull market, you burn through negative divergences and bearish technicals. All right, enough on that. There's Uber if you want, and the things that need to happen, in my opinion, before I would commit money on the long side on it. And the other part of that question was Home Depot, probably leaning on the bullish side. All right. So I posted here, Home Depot and the related components of the home builder ETF were among my top picks when I highlighted them, including Home Depot on the very day that Home Depot and the builders bottom. You can click on that. It'll bring you the tags so you can see here. This is where I started covering them most recently. This is the tag for Home Depot, so it's going to show you all posts chronological order that Home Depot was covered, and so that's where I highlighted these guys, and I stayed on top of them each and every day, 3 days, saying this is the best looking setup. That was March 19th. We'll just go to live chart here, or the same chart I posted. Where'd it go? All right, so that was it. So look, in a nutshell, my replies here, you can read it. Better fish to fry. This is where exactly the day it bottomed and all the home builders bottomed. We have just beautiful at support, bullish falling wedges, but it's rallied 25% without really much of a breather. It's had zigzagged up. It ran right into its 200-day moving average. It's been rejected there. Yeah, sure. If it breaks the 200 after testing it, but it's overbought. It's in a bear trend. Remember, Home Depot peaked right here. That was a lower high, a lower high, a lower high, low, low, low. That, my friends, is just a clear downtrend. And in a bear market, overbought, which is a 70 level, is typically fleeting and usually a gift to shorts, to short a stock, or to longs that game that bounce. I didn't milk every penny of that move, but I got a good part of it. I like the builders, a month ago to a couple months ago. And that's it. So look, you're in a bear market without any evidence that the bear market's over, or bear trend. I'm sorry. When does that start to happen? Well, when you start taking out previous highs, right? But right now that's not the case. So that's it. So anyways, yeah, if it breaks out, like I said, you're still overbought at best. Wait for it to pull back. If the market's holding up and everything else, maybe a pullback to support, clear out these overbought conditions. But you can see here, overbought, and that's usually when these bear market rallies ended. All right, so that was it for Home Depot and Uber. Is Randy out on vacation? Mike, I sometimes have no idea. Anyways, I answered Mike. I don't know if Friday markets were closed, and I've been posting more than I usually do this week. I'm usually, like I said, on vacation. So no, I'm around. If you have any questions. And this goes to anybody. By the way, Mike, anybody else. I said we did some programming updates on the site last week. If you're not getting any the email notifications on new posts or anything else, any issues with the site, let me know. You can also, there's a contact form here under resources. Just drop me a message. And if you can get into the site, if you don't have access to the site, you can still go there. But if that's the case, you're not listening to this video. It's member content. So, but the contact form is always available, whether you're logged in or not. And you can, of course, post anything. I don't mind if you post something brief under the comment section here. Great one here. Randy, can you update natural gas? Has been churning around this level for a while. Thanks. Yep. And that's exactly why I haven't updated it. I do look at it every day. I haven't updated because there's nothing to update due to the sideways grind. Um, Here it is. So just like QQQ, it's been grinding around sideways for a few weeks after hitting my first price target. I'll show you the. So these are in reverse order here. I gave it to you as a trade idea all the way back on April 22nd with 1, 2, 3, 4, 5, 6 targets. And first target zone was there. So recently broke out above that downtrend line, and with the next buy signal to come on a break above 1125. That was then when it hit that first target. I let you know right there. So you can put profits, arrow breaks to note likely reaction points. And that was all the way back on May 19th. And yeah, so we've locked into a sideways range. There was that. Remember, these two lines here are the target zone. That's when I have two resistance levels in close proximity. And since that hit on May 19th, that first target zone has acted as a ceiling. Now, that's healthy. It's the healthier of the two. It's more of that correction in time than in price, and so you have a trading range here. And so I'm glad you brought that up. I considered it in yesterday's video, but I'm trying to keep I don't like the videos to run too long. So if there's not a new development in something, unless somebody asks me, I'm not going to cover it. Now, we're getting ripe, ready to, sooner or later this thing's going to break, and this is the way I think it goes. Remember, the straight is open, open, close, open, close, open, close. Somebody just sent me something this morning that Iran may have closed it again today, but you know what I predicted when oil was 110 a barrel that in the not so distant future there would be oil just spilling into the strait into all over the Middle East because of the all the strait being shut, and then the wells not being. It's not like your faucet at home, your kitchen faucet where you just turn a handle and the spigot shuts and the water stops coming out. No, that oil's coming out. Those wells are online. They're pumping, and then they have a storage issue where they got all this oil. So, and where I'm going with that is, so yes, so oil prices finally, straight opened up, oil flowing all over the world, spilling out everywhere. Prices have collapsed, come really down. And remember what that does, it tends to, they start capping wells and elsewhere in the world that was picking up demand, including West Texas and elsewhere. So what happens is oil prices start to drop. Well, they start capping some wells, and then the byproduct of oil production is natural gas, oil extraction, I should say. And so, anyways, so that usually you'll see natural gas go up. So I'm still bullish on natural gas. I still expect, but as I said here, you need to break out above that trading range right there, and then that'll trigger the next up in natural gas. So thanks for bringing that one up because I probably wouldn't have updated until it broke. Well, I would have got to it sooner or later. I do these videos every day. I sit down and like try to figure out what's most important right now. Again, I watch 1,000 things a week, hundreds of different things I'm looking at all the time. And then I try to get out to you what's most timely. There's no sense in covering something that's been a, dead money sideways trade. Stock market I'll cover because that is relevant and germane to trading. And right now, like for example, security and sector rotation. Like the home builders were a great example. I give you ITB and as the ETF. When I give you Home Depot, Lowe's, I did extensive videos. And that's one example where the stock market QQQ's gone nowhere, and there was ITB. There was that low right there. When I started covering them, and just the ETF alone, an ETF went up the same amount. So no surprise. I told you it's got the Lowe's, Home Depot, all those stocks are in there. Same 25% gain you can see from the pop up there. All right, so let's get back on task. I think that is it. Where was I? Where was I? Swing trade ideas. Yeah, let me make sure I got everything. So I just want to make sure I answered everyone's questions here. Yep, that's it. All right, let's dive into the semis. I don't know if you guys heard that. I just had some alerts fire off this morning. Right now, a minute ago, opening bell. Let's see what we had. I had a QQQ alert. Let's see what it did. 60-minute. Oh, no. Okay. This must have been on a shorter time frame. We're still above that 705. Let me just pause the video and see if there's anything, any of these alerts that matter. Here's one. T2 hit on REMX. There you go. That's one of my alerts that just triggered at the open here. So we already hit that first target. This is should be an official trade, I believe. Trade ideas, active trade short. REMX. Yep, there it is. Go here. All right. One goes, boom, boom. Okay, that's it. So we shorted it there, right here, and you just hit the second target for 20% profit. Potential third target still in play. Let me give you my 2 cents. It's a pretty good support level, so decent odds for a reaction, but this is a major top, so I can tell you right now, I think we're going to carry down to T3. We may or may not get a reaction. If you're in this one, you've made 20% so far. Tighten your stops up. Where to? At minimum right here. T1 was the first target. It was support. You also have a downtrend line, so if you're going to hold out and let it ride, at least for that potential T3, then maybe consider a stop somewhat above this trend line here. So that's REMX. Let me see what else fired today. Okay, I also had a price alert on FIS. I shared this one with you here. Can't. No, boy, did that one get hit on the stop? I don't know where did we enter? I'll have to pull it up. Let's see. Active trade long, FIS, trade ideas. Active trade long, FIS, July 2nd. We entered that. Next buy signal on July 2nd. Oh, no, we're good. Okay. July 2nd. Yeah, okay. All right. So I got an alert because it took out the R2 resistance level, and that should increase the odds. We're going to go and hit my first and then likely second targets. Now, also got an alert on Lockheed Martin after open today. Had a whole flurry of them. We already hit my first target. This was our buy zone here, our entry zone. And let's stop some blow. And we're back there again. What this one's doing, it's struggling with the 200-day moving averages. See here, it got rejected. There's where it lost the 200s. But if it can gain them back, then you have a total of 4 targets. So this one was already hit. It's just showing me that it hit it again. That's it. Let's move on. I think that's it for the alerts today. Okay, let's talk semis. All right. So this is SOXX. There's a few semiconductor ETFs out there. The two main ones I follow are SOXX and XSD. And as I like to say, SOXX is nice, especially if you like to trade with the juice. The juice meaning leverage, because they have it says the SOXX tracks the PhilX SOXX semiconductor index sector. That's the first to markets, first semiconductor sector. It's been around since the 90s, so you can chart the actual PhilX SOXX way back into the 90s, even before the dot-com bubble. Kind of see what the semis have done. And then they came out with this ETF quite a while. It's also one of the first to market, I believe, the first to market semiconductor ETF. And XSD is just a little more diversified. This one has a little top heaviness, higher concentration in the holdings, as I've covered with you before. And so to kind of summarize it, we had recently that big divergent high, negative divergence sell signal here. It's I just put up some targets on the daily chart. Remember, subscribers, a couple have asked for SOXX. I've urged caution until we started to get a little more evidence on the market breaking down. I gave you targets on the 60-minute chart recently. And as recent as last week, somebody updated, we hit my first target there. We hit it again, and we're starting to just by a hair clear it. So, and this is basically, you know, SOXX upside down, although you have decay over time. So over time, get away from using, charting any of these leverage ETFs, especially on a volatile sector, uh, long term. Near term, that's fine. And again, these targets were given several subscribers request targets here. I've given you targets which I maintain on the non-leveraged version SOXX. It's still pretty aggressive targets for the semis, and we're going to go over that right now. So here's what we have. There's a couple things to note. Just like the other, there was another stock I covered in this video. The zero line on the semis, and this is SOXX, again, does just a bang up job of delineating trends, right? So you can see right here. And again, I use a 9 EMA. It's the last two to cross, so it helps avoid whipsaws. That trend's bullish right there throughout that whole time period. And here's where we cross. Let's just measure it. We cross there. I'm gonna come to a little to the right of it because it'll move the here, I can do this too. There's another way to do it. Right there's a crossover. So let's say you were just trading this, you were long when the semis were above the line. Um, you know, to the high, I'm just gonna play the game to the high. I was 60%. Then we had a bearish cross right here. You dropped 17, 18%, but you remained. So you can see you were back testing, especially that white line, last of the two to cross. So from that point, it would have got you out or got you short, and there was a drop of 40% to the lows in the semis. So I don't use it as a standalone. I'm always long semis when I'm above it, always bearish. Again, when you cross, that kind of tells you, hey, the trend has changed. There's a bullish crossover. Be long and strong. That's what it says right there. And when you put on the lines now, add in things such as sell signals. There's the break off the March 30th lows. And I gave you some today. I added some targets if you want to trade just SOXX. Here's where I think it might come all the way down to. Now let's go over before we move on. Okay, so that's pretty clear, right? Pretty clear. So that's something to watch for. We're not at risk right now today of crossing over. XSD now is closer, and this is again much more diversified, because instead of just 30 holdings and a lot of concentration, you have a total of 43 holdings. In the top 10 only make up 29%, so less than a third, a little more than a quarter. The top 10 holdings. I go back to SOXX just for reference. There's 30 holdings. The top 10 alone make up 56%, over half. All right, so when you want to, my point is, you want to get an overall gauge of the overall semiconductor sector, this is the better one to use. You're welcome to trade it. I just don't believe that the Spiders makes any leveraged inverse or leveraged like SOXX or SOXL. All right, but the same thing you can see just does the PPO in this case does a beautiful job of delineating trends, and so it's been bullish since this point. We had a little whipsaw there, other than that, bullish there. So it's captured almost all of this trend. Bearish throughout here, caught that correction. You can see caught that correction there. So it does a pretty good job. So we're getting close. We're not there yet. It would just be an added check mark, especially if it's a solid move down through there with the zero line, the PPO signal line crossing down below that zero line. And this correlates with that final target I have on SOXX down here. Basically a test of the we had a multi-month trading range right there, and then a breakout. We went vertical. So that's how that looks. Let's just rifle through the components of SOXX. There's only 30 of them. You can see I sort them by market cap, so just keep in mind NVIDIA is the biggest one, Taiwan Semi number 2. NVIDIA is a $4.7 trillion company, Taiwan Semi 2.3, Broadcom 1.7, Micron 1.1 trillion. So these are your trillion-dollar semis, and then you go down there and it goes down from there. So we'll rifle through these real quick because, as I like to say, Birds of a feather flock together, and with semis, there is pretty much a pretty high correlation between them. Uh, they tend to move up and down together. NVIDIA. NVIDIA has just been a dead money stock for ages. Remember, we had a multi-month trading range back here. Let me box it. Let me use my box tool. Turn off all the lines. You might see it a little more clear. All right, grab the box tool. There's a multi-month trading range. It had one false breakout, failed breakout. Predicted it would fail because we had negative divergence at that point right there. My lines are off, but I had it drawn on. And we did. We fell back into the range, and it usually is the case. Once you break out of a trading range, ultimately you go down to the bottom of the range if you fall back into it. Now, take that line across. We're testing the top of that range now. So this is a breakout, a successful back test. So far, another successful back test, and the 200s. This stock behaves pretty well to its 200s. You want to be long and strong when you're above it, when you take it out. But once the 200s are lost, as they were right here, the stock fell 30%. And after it lost them there, it back tested, rejected. And that's where it regained them. So this is a very critical level, both on price support as well as I just showed you, as the 200-day moving averages. And you can see, as I told you, I sometimes do, I mentioned earlier in the video, my delineation line, trend delineation line on the PPO is at negative 1.37. It's this purple line. So I analyze everything and I look, and that's where it seems to be. Again, the white lines, the last two to cross. So you got a bear trend there, and it confirmed it. Ever since then, it's been bullish. Pullbacks to that level have been buying opportunities, right? And they ended the correction. So if we cross it, that's going to be bearish. You're also going to lose the 200s. You're going to re-enter this trading range. And if we fall back into it again, at minimum, the bottom of the range, and I expect a downside breakdown throughout. So a lot of downside potential in semis. You guys know that. I've been harping on this, just being patient, taking our shots. We're currently short again. And I think it's one of the most I think this sector has some of the best profit potential of any sector this year on the short side. Okay, so there's NVIDIA from, again, that was a weekly chart. Just wanted to show you there. And you can see here's the trading range. Then when you look at it on the weekly, from that perspective, we already fallen back into the range. So big divergence. And these are, it's kind of an ongoing, long-standing trade. I give you targets back here, a total of 4. 1, 2. We hit my first target. We hit it again. And we've made a marginal new and still divergent high from the initial sell signal, wherever it was back here. And it's taken a long time to play out, but it's been, again, this was a leader. And this kind of, to me, says something that the stock just hasn't gone up now for over a year. It's trading close to, roughly, it's trading right now today at about 193, basically about where it was back here in, what is that? Middle of August of 2025. So yeah, about a year ago almost. Okay, let's move on a little quicker here. Go to Taiwan Semi number 2. Taiwan Semi, like Johnny Cash, walking the line, uptrend line. Set alert and price support, BOD, or the first support level below, benefit of the doubt, about 419. So you want to see a break of this trend line. And then if you want to give it the benefit of the doubt, wait for that 418.90-ish level to go. And we already hit, I gave you 3 targets on this one. We already hit that first target there, pushed up, made a marginal new, and still very much divergent high. And these are still your next 2 targets there, T2, T3. Broadcom peaked here on a divergent high. Island cluster top, that's 2 candles right there together, separated by gaps on both sides. That's what we call an island cluster top. It's a topping pattern, not just a correction pattern. So that tells you that the end of the run could be in on this one. and it's testing its 200-day moving averages right now and price support. So it needs to take out that 359.50 and the 200 days. And just like everything, you can see my delineation lines at about negative 2.5%. Does a great job, a really, really good job of defining the trend. Now, this has been one of the strongest semis. Look at that bull run right there. But again, it's told you throughout it, it's been above. It's had one nice healthy correction, 45% drop. Again, doesn't look like a lot on here. I use log scaling. I highly recommend using log scaling. If you're using linear, aka arithmetic scaling, you're going to just have a distortion on a stock that had this kind of move. Here, you want to see what it would look like? So that's an important thing. I try to give you these little tidbits for those new to trading. If you click that, it's a whole different, the trend lines change, everything changes. Log scaling, what it does in a nutshell, it puts all the percentage, the point moves, it equalizes them in percentage terms. Because when you're a $45 stock and you go up, or let's go down here to a $40 stock and it goes up, 10 points, well, that's a 25% gain. If you go from 40 to 50, it's a 25% gain on the 10 points. When you're a $400 stock, if you go up 10 points, then that's what is that fraction? It's a couple percentage points. Not even, I'm sorry, fraction, like 2.5%. All right, so let's move on here. What does Broadcom need to do? Well, again, watch that PPO for a solid bearish crossover, and the 200-day moving averages and that 359.48 level to get taken out. Micron. And remember also, guys, what I'm doing here is collectively, like I said, this has been one of the most strongest, powerful, most resilient trades of any sector in recent history. So the analogy I like to always use is my criminal defense case thing. In a criminal proceeding in the courts, the prosecution has to prove beyond a reasonable shadow of a doubt that the defendant is guilty. Otherwise, there's the presumption of innocence. When you're shorting one of the most strongest, overloved, powerful trades out there, you need to come with a preponderance of evidence. You need to have a pretty strong case to short or especially get aggressively short. So that's why I do these long-winded videos, because if it's just SOXX or just XSD, one of those ETFs breaking a trend line or breaking a support level or flipping an indicator crossing, on the PPO, well, that may do the trick. And it may warrant an initial position, but you don't want to engage it aggressively short if you have a high degree of confidence. And so, as I often say, an index or a sector is simply a sum of its parts. That's why I go through these parts. That's why I'm picking on SOXX, because it has fewer names, and I can rifle through 30 stocks in a video that usually can go less than an hour. So that's it. This one, Micron, broke down. Beautiful, clean, well-defined uptrend line right here, right? And that's a check mark. So what I'm doing here is I go through the components, and remember, I'm going through an order market cap. So the ones that in the beginning are more important than the ones when I get to the end here on the bottom, of the 30 names. So that's a clear check mark. The stock is clearly broken down, putting it on a sell signal. This is my first price target there, my second price target, and my third right now would be that uptrend line. So a lot of downside left on Micron. AMD, Advanced Micro, it broke down, gave me a sell signal recently here. Let me grab my drawing tool. Breakdown, back test, but it's been bouncing on the 501 support. So that's a level it needs to go. Set a price alert at 501. If that goes, my next support, 467.94. We'll call that 465. When that goes, 399.34. Then there's a gap to be backfilled if that goes. So you can see like that. And again, on a lot of these guys, nothing's changed. I've been covering these guys on and off for months now. I'm calling them back to their 200s. So you can call me a raging bear if you want, whatever you want, but that's bullish. If you're longer term bull, that'd be a 50% drop. You'll get wiped out if you remain long, or you'll make a ton of money shorting. But guess what, guys? I don't think it's an uber bearish call. In the strongest of all bull markets, stocks will come, they always will come back to visit their 200s. In a bear market, they come back and they check their 200s from below. In a bull market, and what happens, you get too far away from your 200-day moving averages, um, you come back and you visit them. And I'll show you some examples here. I mean, it's any stock. I'm just, there's where we were in a bear market on AMD, clearly in a bear market, right? Right here. We lost them. And then what did they do? They shorted it every rally back or sold. Longs got out, shorts jumped in, and then the 200s were recovered here. And what do? Your MO changes. Your modus operandi goes from short rallies or take profits on bear market rallies if you go long, sell the 200s. Then once they're taken back, you buy the 200s, you buy the 200s, you buy the 200s. Oh, lost, short it. Short it. All right. You made a shitload of money if you did that. And then right there, clearly recovered them. And what do? You buy the 200s. And now at minimum, I'm just looking for a, test the 200s. Now, at some point, we're going to break them again. But just to come back and just to test the 200s, which could keep the bull market going. So if you're a believer that this AI thing is just in its infancy and these chip companies are going to have more business than they can handle, or continue to have more business than they can handle for years going forward, then that's it. And that's where you look to buy AMD on a pullback to the 200s. So if you can, align it with price support, look at this really nice support level there. You can see all my levels. So that's it. But first things first, you got to break the next support levels. It's on a sell signal, but additional sell signals to come on the break of those support levels I covered. ASML right here. We already broke this minor uptrend line. We back tested it, put in a divergent high. We need to break 1731.50, then this trend line, and that will take us down to here. And then again, let's just call them all back to their 200s now. Keep it simple. I'll continue to update these trades. Intel was doing what I wanted to see it do. We had a trading range right there, very well defined. I didn't use my box tool, but you can see I already had a box drawn there. We had a breakout that I predicted would fail. Why? Because it occurred with strong negative divergences and overbought. We were already very overbought leading into it. The only thing better than being overbought to make a case for short is coming in at a lower overbought reading to give you that negative divergence. Because overbought, it's usually not the extreme overbought reading. It's usually one more thrust higher with a lower overbought reading. That gives me my beloved negative divergence. When I say beloved for short trades, it's just like I like positive divergence for long trades. And then that's it. So as I stated before we did it, that if we fell back in the box in the trading range, we would most likely, the next stop will be down to the bottom and then most likely down through below. We're halfway there already to the bottom of that trading range, 99.60 minimum target that gave you. I still expect it to break. That'll take us down to 80.39. And then if and when that goes, we'll backfill the gap and we'll come and check our 200. So, and that will be said and done. If my analysis is correct, it's going to be a 50% drop in Intel. And that's going to get the, it's going to do some damages to the indexes if correct. My minimum target from the recent highs would be a drop of 30%. Still enough to put a dent in the indexes, and we're only about halfway there again right here. So target 1, 2, 3, and if we shoot down 3, or again, these trend lines are dynamic. It depends how fast we fall. Do we hit that? Or do we go like something like this? Take a while to get there. The 200s would flatten out. Either way, it's all the same. It's my target range here. Okay, let's rifle through a few more. AMD, one of the big chip equipment makers, semiconductor equipment makers. It's coming down to this trend line. It's my minimum target. We're already about 2/3 of the way there, about close to 30% drop so far. Breakdown and back test of that steep uptrend line. Lam Research, another semi chip equipment maker. Divergent high, just took out this trend line right here, given another sell signal. Next support coming up, 304.84 price plus uptrend line support. And I gave you before, I guess, this long-term target down here, but you get your 200s coming in here. I'd be shocked if they don't buy the 200s, because these stocks will be near term quite oversold in the near term. So that's where at that point, if you're in SOXS, the two-time leveraged, was it two or three, semi ETF, you want to at minimum book profits on that one or tighten up stops really good. And if you still want to hold out for more, you think there's more coming, might be prudent to switch over to a pure SOXX short where there's no decay. Um, ARM Holdings, Divergent High, sell signal on a breakdown. It's already dropped 32%. So poor sucker that bought that high right there has lost a third of their money already. It's at really nice support, 299.66, both uptrend line and price. So I'm going to say this and I'm going to mean it. I'm not being facetious. If you are bullish, and I know there's a few out there on the markets or the semis, or semis in particular, or even more particular, this stock, if you don't buy here, I don't know where you buy. This is dual support. The stock has just lost a third of its value in a matter of a few weeks, over a third of its value. And so it's worked off these extreme overbought conditions over here. This is where you buy. However, my analysis is correct. The semis aren't finished yet. So if it breaks that support, that's going to be very bearish. I mean, look, here's the thing. If you want to be a little more agnostic about it, not, do that whole, oh, be thy neither bull nor bear, just play the charts kind of thing, take a shot, put your stop a little bit below, because if it breaks that, especially on a closing basis, it's probably going to then drop to this next support, about 238. I'm going to round that up because it's so close. 238, next target. And then if things get really ugly, it could go even further. So you can buy it here with a stop somewhat below. Where to? Well, it depends. Do you think the market's going to new highs and the semis are? I think a major top is probably in. So, but again, if you want to just take a reflexive bounce, but the price action right now has been pretty poor in these guys, and so be careful there, trying to catch a falling knife if you step in. But again, it's subjective. It's just not the trade I'm taking now. I'm taking the other side of it. Not that particular one, just using the semi ETF and a couple individual names short. Texas Instruments, Divergent High, beautiful bearish rising wedge right here. You guys see this? That was just, breakdown. Hit support, bounce, put in a marginal new and still very much divergent high. Hit it again. That's 274.90. So that's what needs to go to open the door to this next target, 259.85. And then if that gap is entered, it will probably be backfilled, and that would be my final target. Yep, calling them back to the 200s. There's 200 blue is a 200 simple, red's a 200 exponential. And that bottom of that gap right here, this big old gap from right here, comes in with that. So that gives this stock a total of about a 29% drop if that target is hit from the recent highs. And also, remember, right now, look, a lot of these guys are at support, and you have PPOs back testing the zero line. This one, it was a little brief dip below, and it's not that there wasn't a correction involved. It was a big drop. So again, you can take either side of this trade, guys. I'm showing you support and resistance levels that I think are important. So if you're bullish on these guys, you want to buy the ones that are at support with stops somewhat below. And if you're bearish, you want to increase your short positions when these next support levels break. And like I said, you can keep it simple by trading one of the ETFs. Just collectively keep an eye on all these individual names, and the more that break down, the stronger your case is. Marvel, nice multi-week, multi-month, about 2-month trading range. That was a divergent high. Oh no, that wasn't a divergent high, but this one was what made an equal high. Two equal highs with lower highs in the indicators is negative divergence. And then boom, yesterday it broke down below the trading range And I should have a level here at that gap. Traders love those gaps. You have a gap that's pretty much been backfilled now. Next support there. I could probably, well, we already took out the trend lines, so that's that. Qualcomm, look at that. Boom, kissed its 200 last week. That looks like Thursday right there, last trading day of the week. But PPO is now crossed below there. So, dip buyers like Pavlov's dogs do what they do. They come in and buy the pullbacks of the 200. Remember this, but this one went parabolic. I always talk about that. Parabolic advances never end well. So Qualcomm dropped in a matter of just weeks, 33%. This was one of my favorites back here. If you recall, you can go back early April. I point out this bullish falling wedge pattern and the fact that Qualcomm, one of the leading big semis, I know Apple got away from a couple years ago, all that blah, 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 but the semis were rocking and this one was way down and had a huge game of catch up to play, and it sure did. So from that bullish falling wedge breakout there, that set up, wish I could tell you I milked that whole thing. It was 106% rally in a matter of literally just a couple months. Huge gain, but the stock went parabolic. I don't have a parabolic line tool on this chart, but I could draw it for you, going up and then you go, that was the parabolic advance. It broke, kicked back, had a marginal new, but still divergent high, and a third of the value wiped out. Back to the 200s, but this thing just crossed the PPO is now clearly below the zero line. Again, you can see my purple line is my delineation line is the zero line on this one. And so be careful there. Bull trend, buy pullbacks to it, pullback. But once it breaks, if you didn't heed that warning, there was a sell signal in conjunction with it right there. From that point, it dropped. I'm trying to measure. Before all said and done, the stock fell 40%. And you can see that it was in a bear trend right here. Then it got bullish, took it back, went sideways for a bit, but it was mostly above there and it was in an uptrend. Then it lost it right here. This whole thing was a negative trend, and that's where it took it back. That buy signal that I gave you on the bullish falling wedge breakout coincided with the PPO crossing back above the zero line. And now it's down below. So this probably reflects a bounce, birds of a feather thing. So if the rest of the semis go down, Qualcomm's probably going to lose its 200s. I have a note, see weekly chart. This is just the nature of the beast. This is how I analyze stocks. I look, I've covered this before. This stock tends to fall very fast following sharp rallies. What's a sharp rally? Well, it's not hard to see. Straight. I have a few marked here. That was a straight up. It doesn't look like a lot again because I'm going back years. It's a weekly chart, but these are the sharp drops that come after sharp rallies. That doesn't look like a lot. It was 27%. There was another near vertical rally. Stock crashed. Another sharp advance. Stock crashed. And to say that that's a sharp advance would be an understatement. Stock's crashing. And you can see these previous drops. Looks like the stock may have quite a bit more and big negative divergence. So I just wanted to point that out there, that while last time this guy was underperforming, it's certainly underperforming the rest of the sector now. It's fallen more than the others. I'm not so bullish on it this time around because I also don't have negative divergence, right? I mean, positive. We had positive divergence back here. ADI, divergent high, breakdown, and it's starting to crack this 380 benefit of the doubt support right here. So you had this trading range here, divergent high, sell signal on the trend line break. If it can close below 380, probably going to go down on my next targets. There's your 200s right there. A lab, Astera Labs just broke down today. We had a couple stick saves last few trading sessions, last couple, and today looks like a nice clean breakdown. I'll give you a benefit of the doubt line right about there. Takes out 370.80. Should fall down further. NPXI, I gave you a head and potential head and shoulders. That's a left shoulder. Head was also a divergent high. This is the negative divergence I'm talking about. And a right shoulder. Textbook little head and shoulders topping pattern. I gave you a neckline. On June 23rd, so a few weeks ago, I gave you a measured target down here, which is the measured target of the head and shoulders pattern, but it also comes in with, you got it, the 200-day moving averages right there. So this one should have more downside to come. MPWR, monolithic power systems, walking the line right now. Oops, trying to show you a trend line right here, and coming up on its 200. So again, if you are bullish, your this stock is being offering an objective long entry. It's almost there to the 200s. Like it almost got there. Like it almost got there. This one they tend to step in a little early, and trendline support. So the glass half full guys and gals can step in and buy it here. Stop somewhat below. Glass half empty. You can see that the PPO is clearly now below the zero line. And is it going to be just a little brief stint below like this one or this one? Or is it going to be a major trend change signal like this one right here, where the stock coincided with a break of that support, sell signal triggered, and from there it fell 52%. UMC, divergent high, bearish rising wedge, breakdown back test, and it's now taking out the 2411 support. My next target here is 1878. You could short this one here right now and set a buy to cover limit order slightly above 1878, give you about a 20% profit if hit. STM, divergent high, and trend line comes in with the 200s, if you can see here. The trend line I just drew right here comes in with, there's your 200 exponential, 200 simple. So plenty of meat. All right, so I'm getting redundant here, but again, Teradyne, the ones that haven't broken down since the last update, that gave you big negative divergence, divergent high, sell signal break of the primary yellow uptrend line. All right, a few more to go. MCHP peaked on that divergent high, sell signal came on the break of that trend line, and it continues to move lower. It's at my 83.25 target now. 200 days are still below, and it's just starting to cross the PPO down below the zero line. Not by much, but it is below it right now. The signal line, yeah, the 9 EMA. Here's a crossover there. It says bear trend, captured that whole thing. That was the previous one, captured that, and that was the one before, captured that. So just getting going, in my opinion. CRDO, Credo Technology Group Holdings, just cracking below the primary uptrend line. We had a minor uptrend line that was taken out right here recently. This is a more significant trend line. There's your 200s, and there's price support. I think you'll overshoot the 200s on this one, hit that 129.50-ish support there, target. That would be about a 46% drop or profit if you short in Credo. ASX, breaking trend line support right now as I speak. And there's a trend line, 200s down here. ON on Semiconductor Corp. Put in a divergent high, then give us a sell signal and a trend line break. Little kickback rally, but failed to make a new high. And this stock so far has dropped, hit that 86.50-ish target I gave you right there for 36% profit so far. And my next target, which I think it'll hit, is 78.57. We'll call that 78.60. And the 200-day simple exponential moving average comes in there. Although I don't think that's it. I think this is going to take this one down even further to this primary uptrend line right here that intersects with about the 67 support level. And so a lot of these, I suspect you're going to undercut the 200s, even if it's just briefly. And so this one, to hit that trend line, it's going to be all before all said and done. I'm just eyeballing where it's probably going to come in at. That'd be about a 51% drop. So yeah, guys, it's right or wrong, manage your positions with stops. but I just see just big profit potential in this trade, shorting the semis. Um, Primary uptrend line right here. This is MTSI, Macom Technology Solutions. There's a initial trend line right there. Next price target, if and when that goes, which I favor, 258, a little north of 258, 258.17. 200-day exponential moving average, 200 simple, and then max target would be a pullback to this primary uptrend line, and that would represent a total drop of about, if hit, a total drop of almost 50% on MTSI. ENTG, Integris, pretty simple stuff. Divergent high 1, correction 1. Even bigger divergence. Remember, there was no reset. This is an extension of the existing divergence that's been building, which indicates an even bigger drop this time around. Minimum target, your 200-day moving averages. NVMI, that's Nova Limited, divergent high. Just took out the primary uptrend line. You can see how the primary uptrend line comes off the April 2024 lows, and that's been taken out today. It's also coming up on its 200-day moving averages right now, and price support. That price support is it's a range. The bottom of it's about 414. So if 414 is taken out, the stock will have also dropped below its 200-day moving averages, and that would increase the odds of going even lower to any of these targets down here. RMBS, Rambus, big divergent high, negative divergences with a sell signal there. It's breaking below its 200-day moving averages today. Both the simple and exponential come in together. They've both been taken out today in one fell swoop. The day is young. We'll see if it closes. This is a daily chart, so all that matters is how you close. And as I like to say, the redder the better. So if you can continue to build on today's 7% drop, close, down south of that before the close today, you will have clearly taken out the 200s. Every now and then you get whipsaws, but you can see this one came, you had positive, aka bullish divergence when that one broke down, and you also hit that 76 support. That's why you got to bounce. We don't have positive divergence. In fact, the PPO signal line has just recently crossed down below the zero line. Here, it had already crossed. There was already a healthy correction that had played out. And so this time, charts look a little different. Bottom line, my next target on this one's 87.90. And from where we're at today, that would constitute a drop of another 16%, which would be a total drop from the recent high of about almost 50%. So there's a common theme. A lot of these semis are looking at, if my targets are hit, a lot of them are looking to be chopped in half, about a 50% drop. Skyworks Solutions, SWKS. This one's long since topped here. Trend line break, sell signal there, back test, rejected on the back test. Hit my $62 target, and today it took it out. It's trading below it. That increases the odds. My next target of 58.40 will be hit, and possibly more. All right, that's it. Loops us back to the beginning, back to NVIDIA. So there's your update on the semis. And remember, if you're just catching up on things, what we've seen is continuing narrowing of market breadth. We have seen some sector rotation recently, which I will give that, chalk up a few points there to tech taking a breather, correcting. The semis had a lot of hot air. So if you want to, again, be an optimist, glass half full guy or gal, you can say this is healthy sector rotation. And that's what we're doing. I've given you plenty of long trade ideas in obscure niche areas. And so, that's still the MO. As long as the broad markets trade sideways, we're going to make money going long the most bullish stocks and sectors and or commodities, gold, precious metals, things like that, and then short the most bearish. If we get to a point where the broad markets break some major supports or put in some serious sell signals on the longer term charts, then what I will often do, if I expect a broad-based sell-off, especially in the NASDAQ 100, or maybe even the S&P 500. You're going to need the S&P to go down as well. Then what I do at times is I will pare back, have fewer individual stocks and sectors and push the NQs hard, meaning the NASDAQ 100 futures. Because if you get to that point, now what is it going to take? Well, one thing you need to see is, the broad markets, especially the NASDAQ 100, but the S&P as well, lose their 200-day moving averages. They lost them here, but that proved to be a whipsaw. That was addressed at the time. Last time we lost the 200s was right here back in 2025. We had a back test, so if you missed the breakdown, you were given a objective short entry on the back test. And that's what we did here. And I said, but don't short above them and then stop out anything. I had a no-go zone there. We did it here. We shorted the back test there, and there was another. The Qs got rejected and dropped 20% in short order. And so again, you can see this is a very simple straight trading strategy. Sell breaks of the buy pullbacks to the 200s in a bull trend. When they're lost, short rallies back to them. And again, there's a lot of other moving parts in here. And we start looking to get long. In almost all cases, you can go back, we're long before the 200s were recovered based on positive, aka bullish divergences, breakouts on the 60-minute time frame and daily time frames, or bullish reversal candlesticks, things like that. But then right here, that's where the Qs recovered the 200s. And then what did they do? They bought pullbacks to the 200s until they didn't buy them. And then, so that's it. So right now, remember, this coincides with my fourth and final target on the current swing trade on QQQ, which is based off the 60-minute charts. It's a pullback to the 200-day moving averages, which is about 636. You can see right here on the chart. And that's where T4 lies, about just a hair over, about 636.34 is the bottom of my fourth final target zone. So to stitch it all together, if the semis get anywhere close to the targets I just gave you, I wouldn't be just surprised. I would be utterly shocked if it didn't drag QQ down with it. It will. It's simple mathematics. The QQQ is a tech-heavy index, and it's full of semiconductor stocks. And if the semis are going down that hard, the market's going to read it as there's something going on with the AI trade, that the big companies are not seeing the profits on AI investment. Whatever. The narrative's going to change, guys. That's the one thing. Charts come first. I've been doing this long enough to tell you the media will always assign a headline to every big move in the market, whether it's a big move up or big move down. They're going to write in, fill in the blanks on any headline, and sometimes they're laughable because there's many instances I've seen them cite the same exact reason for a big move down in the market, where a few weeks earlier they were saying they cited that reason as bullish. And one example, if you're wondering what I'm talking about, might be interest rates. You get a hot, you get a hot number on inflation or a bad number on employment. And they can turn around and cite that as it strengthens the chance now of a Fed rate cut. And again, they can spin it as bullish or bearish. A big drop in the jobs numbers. Employment is bearish for the economy, but sometimes the market will take that as bullish because it increases the odds of a rate cut. Whereas other times, it'll take it as on face value what it is bearish, because if people are losing jobs and consumer confidence and consumer spending goes down. So it's almost laughable. Anyways, I'll wrap it up here. I think you guys know what I'm talking about. Follow the charts. Charts are going to be your guide. The TV, remember what they're doing is they're reporting the news. I call this right side of the chart because I take what's on the left over here, prices. This is where we are today. So everything over here is the right side of the chart. I move my line there. Some people have their charts and, right there. That's where we are now. But that's what we do. We take this, everything back here and here and here, to predict where we're going to go here. All right. And the news is going to tell you what happened today or yesterday. That's what they do. So CNBC, it's fun to kind of And don't get me wrong, I like to factor in fundamental developments and, hear the headlines, but very, very little predictive value given out there. Okay, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.